Welcome back to Wealth-ology. For today's video, we will be going to talk about Michael Burry predicts another market crash in 2022. Let's get started. Michael Burry is the character in the film who correctly forecast the 2008 financial catastrophe, and the irony is that he is expecting yet another financial collapse in the near and medium-term future. He stated to Michael Burry, passive investments such as index funds and exchange-traded funds are inflating stock and bond prices in a similar way that collateralized debt obligations did for subprime mortgages more than 10 years ago. When the massive inflows into passive vehicles reverse, it will be ugly. He doesn't know exactly what it will be, but he does say, like most bubbles, the longer it goes on, the worse the crash will be. Stock 1. Taylor Brands. Percent of portfolio 13.37%. Michael Burry's most valuable stock. It's called Taylor Brands, and some of you may have heard of it before. Burry owns $12.7 million of the stock, which accounts for a little over 13% of his portfolio. Burry, on the other hand, has been investing heavily in Taylor Brands. His wage has increased by 40% from the previous quarter. So, what exactly are Taylor Brands? It is a holding company for many men's fashion businesses around the United States. As a result, it essentially owns a number of men's clothing stores in the United States. This is a really simple business model. If you look at the stock price of Taylor brand over the last few years, you'll notice that it's been a terrible, awful story for the company. The stock has lost 90% of its value in just 5 years. This is ridiculous. And it's all because their net income has been dreadful. Over the last few years, profit has been either negative or near zero. This certainly caused investors to fear, resulting in stock prices plummeting. But this is where Michael Burry comes into play. He enjoys buying stocks when they are cheap and everyone else is panicking. Stock 2. Western Digital. Percent of portfolio 12.43%. Moving on to Burry's second largest investment, which accounts for 12% of the portfolio and is comparable to Taylor Brands. Burry now owns $11.9 million worth of stock, up to 66% from the previous quarter. Western Digital is a computer and data storage company established in the United States. It primarily produces and distributes hard disk drives and other storage-related products. Data center systems, cloud storage services, and other storage devices are examples of this. WDC has had a fantastic year in terms of stock. They decreased by 40% at first, then increased by approximately 50%, then dropped again and are again up by more than 70%. It's a swing traders and value investors' dream come true. If value investors can truly recognize the stock's intrinsic weight, as evidenced by his previous acquisitions, Michael Burry clearly believes he understands the stock's fundamental value. If it drops again, it's a stock worth looking into more. Stock 3. Cleveland-Cliffs. Percent of portfolio 12.27%. This is an iron ore mining stock, which is an intriguing investment. Michael invests $117 million in Cleveland-Cliffs owned by his investment firm. It represents 12.7% of his total wealth. Cleveland-Cliffs is a firm that has been sorting and palletizing iron ore for many years. According to the website, they appear to be building the future. When you look into Cleveland-Cliffs stock, the first thing you'll undoubtedly notice is their PE ratio. The cost is $7.26. $3.94 are the earnings. It has a price-to-earnings ratio of approximately 1.84. Because these types of iron ore companies are so volatile, the PE ratio is so low. Just look at the prior earnings per share figures. The stock experienced negative earnings per share in 2014 and 2015. Since then, in the years to come, it has been positive. Predicting what will happen in the future, on the other hand, may be tricky. That is why the cost is so low. Michael Burry appears to believe he knows enough about the stock to understand it, as seen by his investment. Stock 4. FedEx, percent of portfolio, 10.30%. This is a brand new investment in his portfolio, accounting for 10.3% of his total assets at the moment. He owns $9.8 million worth of FedEx stock. FedEx is a shipping firm. As you may know, they are without a doubt a company that provides job placement services in the United States. According to Wikipedia, the company is known for its overnight delivery services and for being the first to design a system that could track shipments and provide real-time status updates. FedEx, as you can see, delivers a lot of goods every day, with an average of 6.2 million shipments delivered every day in 2019. However, FedEx is concerned since package delivery appears to be slowing and maturing. How are things going to play out with Amazon and Ups? Can they keep growing in the future? You know, this is the big question when it comes to FedEx stock. Stock 5. Google. Percent of portfolio, 10.17%. Michael Burry's stock may already be familiar to you because this is a well-known company around the world. Google. You undoubtedly use Google as a search engine, presumably to look for random information on the internet. And Google is clearly compensated for the adverts displayed to the billions of people who frequent their site. However, you should be aware that Google, or Alphabet as the parent company is known, owns more than just Google. They clearly control YouTube, which is where you're viewing this. They also own Android, which includes the Play Store, Google Cloud, Gmail, and Waymo, the self-driving car firm. And let's just say they're involved in a number of innovative, high-growth industries. Michael Burry used to think of himself as an opportunistic investor. One of the reasons he doesn't mind putting 10.1% of his stock portfolio into Google is because of this. Stock 6. Cardinal Health. Percent of portfolio, 9.85%. The fact is, we still need healthcare in a market meltdown. Cardinal Health, as the name implies, is a healthcare corporation that accounts for 9.5% of a stock portfolio. In a crash, the healthcare sector tends to fare similarly to the rest of the economy. Even in a market meltdown, you'll discover that the prices of almost all industries will fall. However, some will be affected less than others. The healthcare sector suffers less than other sectors because, regardless of the stock markets, humans require healthcare. Stock 7. Alibaba. Percent of portfolio, 8.86%. Alibaba was founded by Jack Ma, a prominent Chinese businessman. He turned it into China's largest corporation. Michael Burry has now invested in Alibaba's Jack Ma. He owns an investment in the company worth $8.4 million, or 8.86% of his stock portfolio. Alibaba is a huge conglomerate with many different businesses. They have Taobao and AliExpress, which are both e-commerce platforms. Similar to Amazon in the West, they have Ali Cloud, which is similar to Google Cloud, and they own a stake in Weibo, China's version of Facebook. Stock 8. Walt Disney. Percent of portfolio, 8.76%. Walt Disney owns 60,000 shares of the legendary company, which has a market value of $8.3 million and accounts for 0.76% of his portfolio. Disney is a media and entertainment business based in the United States. They have theme parks that are popular tourist attractions, as well as a children's television channel, and most importantly, they produce films. There are some classics from back in the day, as well as some more recent notable artists. Disney Plus, which will compete with Netflix, has definitely been developed and produced. So, you're familiar with this corporation, which is a well-diversified American entertainment company controlled by Burry. Stock 9. Green Sky. Percent of portfolio, 7.71%. By any stretch of the imagination, Green Sky isn't your typical well-known stock. Burry's stock portfolio is made up of a 71% Green Sky. It is worth $7.3 million to him. What exactly is Green Sky? Green Sky is a lending platform that allows businesses, healthcare providers, and home improvement contractors to offer loans to their clients. A very unique business strategy, and according to the numbers, they have 17,000 active merchants, 2.6 million satisfied consumers, and $19 billion in loans funded. So you know they're big in finance, at least in the United States. Stock 10, Sportsman's Warehouse. Percent of portfolio, 6.31%. Sportsman's Warehouse accounts for 6.3% of Burry's overall stock portfolio, an increase of 27% from the previous year. What exactly does this company do? It's a store that sells outdoor sporting products. They evidently have multiple locations, as they can be located in 25 states around the US. You may surely learn more about the athletic sector if it is something you are interested in and know about. It has some attractive stats associated with it, such as a low PE ratio of just 9.09 and a price that has been very stable for some time. And Michael Burry has purchased it. As a result, you may be confident that it is undervalued. In any case, there are the 10 stocks he holds through his self-managed investment fund. Remember that this list excludes Michael Burry's shorts positions, because he is not legally compelled to disclose his shorts positions, which is unfortunate. What can we do? In any way, Burry is continuing to buy some stocks in the current market. Except for Disney, each of these 10 equities is a new or growing investment. As a result, Burry is still worth something on numerous stock exchanges. So which of the Michael Burry market crash predictions have you found to be particularly beneficial? Please let me know in the comment section below, and if you like this video, please give it a thumbs up. Turn on the notification bell and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.